This week is expected to be absolutely crazy, with the potential for war in Israel expanding, with a massive attack coming from Iran, with now new information suggesting the attack could be occurring between August 12th, which is tomorrow, Monday, you might even be watching this on August 12th, and August 16th. And Iran's already starting to signal movement suggesting exactly this might happen. Plus, a lot of actual economic catalysts we want to really be prepared for. So let's go through all of this in this video. The first thing I'd like to bring your attention to is the following from the Department of Defense. They indicate that there's a call out of a phone call, which sort of implies a transcript, but it's really just sort of like a little memo between the Secretary of Defense of the United States and the Minister of Defense of Israel. And Axios is reporting that after this phone call, Israel is alleging a larger scale attack is being prepared right now in Iran. In other words, maybe Israel's satellite monitoring or drone monitoring or their spies or whatever are noticing more munitions being delivered to defensive missile bays or to offensive missile bays, or maybe attack drones are being moved from inside of hangars to outside. And these are the sort of preparations that are usually observable from the sky. And generally attacks happen in, from Iran at night. So do remember that, right now I'm filming this at 8 p.m. in California time, 11 p.m. Eastern time. Israel is at 6 a.m. right now. So you've got about a 7-hour spread there from Eastern time going forward and a 10-hour spread from California time going forward. So keep that in mind for when you're thinking about Israel. Usually the attacks occur at night, which would be sort of like a late afternoon for us over here, early evening for stateside. But anyway, if you go to this call out right here, this is really interesting. Secretary Austin reiterates the United States' commitment and, in light of escalating regional tensions, has now ordered the U.S. Abraham Lincoln Carrier Strike Group, basically an aircraft carrier strike group, and they travel with destroyers and obviously other cruise missile ships. But anyway, this strike group, they're asking it to accelerate its transit to the CENTCOM area. This is to go to provide assistance to an aircraft carrier and strike group that's already there, the Theodore Roosevelt. The Theodore Roosevelt is expected to be done with its tour of duty soon. It's possible that tour might get extended if there is a larger conflict, and it looks like they're trying to double up over there, which is kind of interesting. It does seem like they're getting a little nervous about what Israel is seeing, and I'm sure we're observing what Iran is doing as well to be prepared. But it does sound like something's coming, especially since the secretary's now sent the USS Georgia over there as well. This is a guided missile submarine, and that's heading over to the CENTCOM area. So it does definitely seem like things are getting a little bit more intense, unfortunately, and that the strike may indeed be imminent. Again, we're expecting it now between, and we've heard stuff like this before, so we just knock on wood and hope that Iran, gets talked off a cliff, basically. Sometimes I feel like they talk up, okay, we're going to do it between the 12th and 16th, and it's really just an attempt to try to negotiate. But what I thought was really interesting is Hamas was being sort of asked to negotiate with Israel a new ceasefire deal at a meeting on August 15th, and now they've refused to enter those negotiations, which isn't good. On top of that, it's worth noting that Ohio-class submarine is armed with 150 Tomahawk land attack cruise missiles. And that has been immediately repositioned from its location in the Mediterranean. That's the USS Georgia. What's crazy about that is these Tomahawk land attack cruise missiles, they're not defensive weapons. We're going to blow the crap out of you, Iran. And the reason people are nervous about that, which obviously geopolitical nervousness can often lead to short-term sell-offs in markets, they're often actually buy the dip opportunities, unless, of course, you're walking into a recession. Like if you bought the dip after Russia invaded Ukraine, we still sold off for another 4 months because markets didn't really bottom until the summer to fall of 2022. If you bought after the 2001, 9/11 attacks, you were basically buying into the dot-com bubble. So usually geopolitical doesn't really move the market in a way that is lasting. It's usually the underlying currents that hold lasting, either pain or euphoria for markets. But, some people are going to expect a lot of volatility in the event that, there is a strike from Iran. Not mostly because we don't think we're going to be able to ward off the attack from Iran, but the question of what happens if Israel gets pummeled for so long. It's the time that's going to matter here, right? This strike could start within the next four days, but what if it lasts 3 months? And then all of a sudden, Iron Dome munitions run out and people start running out of food in Israel, or Israel decides that they've gotten pushed so much to the edge and the United States isn't helping Israel enough that they end up launching a strategic nuclear weapon against Iran. Israel has nukes. They're expected to have at least 200 nuclear weapons. This is tricky. I think this is exactly why the United States is moving a submarine with 150 Tomahawk land attack cruise missiles to the region, because they're like, all right, if Israel's gonna, threaten to yoink out the nuke, let's at least use our Tomahawks first. But then the problem is if Iran is getting pummeled to crap so badly, what happens if Russia steps in? We've already seen this these talks about potential Russian air defense munitions getting sent to Iran. See, here's one from literally the Moscow Times. Now, keep this in mind. This is also coming from the New York Times, so this has been reported in U.S. media. Everybody's basically saying the same thing. So, but anyway, the idea is that Russia has started sending advanced air defense systems and radar systems to Iran, as Iran threatens to retaliate for the Israeli assassination of Hamas's political leader, the New York Times reported on Monday. And so this isn't good, because it shows you that this is more than just Iran. This is potentially Iran and Russia, and then potentially North Korea, maybe even China could get involved. So not great. This is where a lot of people are really worried about the potential for a World War III. I mean, Donald Trump reminds us of this on almost a daily basis in his campaign speeches. So this attack is expected to be larger and potentially lasting many, many days to even potentially weeks. And it does look like while there was an initial thought, all right, the threat's imminent. Okay, Iran isn't doing anything. Maybe cooler heads are prevailing. They're backing down. Now all of a sudden it looks like, oh gosh, here it goes. They're moving stuff into position. It looks like it's actually coming this week. I don't know. I mean, I was on edge all last week and nothing happened. Knock on wood. We don't want anything to happen, but it is going to be a risk factor this week. And that comes on top of all of the other catalysts that we've got going on. So let's go through a little bit of the calendar here, and then we got to talk inflation a little bit. So catalysts we're watching. Well, Monday we got Monday.com that reports earnings. That's pretty much it. PPI, producer price inflation on Tuesday, is expected to come in at 0.2% across the board. You get about 33 estimates here. Both median and averages come out to 0.2%, standard deviation of just 0.08%. So you're not really expecting a hot report here, or really any kind of big movement. Same thing for CPI. You've got 0.2% expected across the board, 48 estimates. Average estimate is 0.19. Standard deviation of only 0.04. So this really suggests that markets are expecting inflation to come in either at expectations or low. Personally, I think there's a good chance CPI, PPI come in low. I don't actually really think inflation is that huge of an issue right now anymore. Obviously, prices are still high. I'm just saying new inflation. And the closer you get to 1.6 to 1.7, the better, because if you multiply that by 12, you get to 2%, and that's what you want, that annual number. And you especially want that because Michelle Bowman was yapping this weekend. She says that inflation remains comfortably above our 2% target, that she will remain cautious, and that much of the unemployment we've been seeing has been due to weaker hiring, not necessarily because of high layoffs. This is true. Usually layoffs come like halfway through a recession, so it's kind of a lagging indicator anyway. But the question here that I have is, if she's so concerned about inflation still, she somewhat suggests a bias of the Fed towards a 25 BP cut rather than a 50. So a lot of people are thinking the Fed's going to give us a 50 in Sept. I don't think so. In fact, she even went as far as saying that, here it was. She's not confident that inflation will decline in the same way as it did in the second half of last year. So the second half of last year, which is what we're in now, the July to December period, inflation really plummeted. She doesn't know or doesn't have the confidence that that's going to happen. So you definitely have some dissent over at the Fed in terms of how quickly you're going to move on cutting rates. I know that a lot of people are like, oh, when the Fed starts cutting rates, the market crashes. Part of the reason you get stuff like that is because people post charts like this. I mean, I've been addressing this chart for years, and it's really misleading because what they're doing is they're purposefully just looking at recessionary cuts. But there are two types of cuts. There are recessionary cuts when, yes, the market collapses because of recession. And then there are not recessionary cuts like what we had over here in the mid-90s, your sort of mid-90s soft landing. I mean, you had cuts over here and 5 years, basically, of no recession after cuts began. And they happen to just leave that totally blank, that soft landing, because it ruins their narrative. And the stock market skyrocketed during those 5 years. So, whatever, people want to spread their fear-mongering, I guess. I'm just a believer that it makes a lot of sense. I hear people on both sides here. Some people are like, look, just buy the dip, go all in. Other people, kind of like the positioning that we've taken, is it's not a suggestion or recommendation. It's just telling you what we've done. So it's just very clear and unbiased here. Net long in the market, but definitely hedged with options for especially like this week. But probably will stay that way going into the election, and kind of reducing exposure as well, or have reduced exposure. I don't think there are any plans to reduce exposure anymore at this point. Kind of see as the data comes in, but certainly have increased cash and sort of trimmed at some of the higher valuations, but. Again, that's all historical stuff. So we'll see how this data plays out. So another thing that you're seeing people talk about is this, question of, hey, where did this bad jobs report, where do these bad job numbers come from for the July report? And Nick T was talking about this a little bit. He quoted Goldman Sachs, who suggested that 70% of the rise in July unemployment came from temporary layoffs, with no big jump in Texas, which you may have expected from Hurricane Beryl. The biggest layoffs were actually in leisure and hospitality, education, and healthcare. And when I align this sort of with what we're seeing in the rest of the market, and also what Goldman Sachs elsewhere noted, they noted that travel has clearly been deteriorating in the second half. So far, July basically is the first part of the second half. Airbnb, Expedia, Disney moderation. And the question now that they're asking is this the normalization? Or are we going to go below trend here? Are we going to really slow down? The one place, obviously, we're still seeing spending like crazy is artificial intelligence. We'll see. Goldman Sachs personally says Goldman Sachs, I shouldn't say personally. I mean, they're sort of an institution. But anyway, Goldman Sachs suggests that the defensive sector, like defensive stocks, may outperform as they usually do when the Federal Reserve cuts. I kind of put a little asterisk on this and suggested that the problem with defensives is they usually rely on pricing power, which a lot of companies don't have right now. People are like, defensives could be like a Costco, for example, or an Anheuser-Busch, or whatever. At least those are consumer defensives. And people think, people got to buy there anyway, right? But a lot of those companies have lost so much pricing power that I just don't know if they're going to see that revenue growth markets are expecting, unless people are just going to buy the stock regardless of growth. I don't know. I don't know that there's really, if we do go into a recession, I don't really think there is a safe place in the stock market at all. I think whatever exposure goes down, because historically that's just what happens. Gold goes up and all stocks go down. Now, some stocks go down a lot more, right? High growth companies tend to go down substantially more rapidly. You can see 50 to 90% declines. And the defensives, like a McDonald's, for example, might only go down 15%. But who knows? Past performance doesn't guarantee what the future is going to hold. Maybe defensives will do well this time. I don't know. That's when. So Wednesday we get that CPI. The bigger one to me is actually going to be retail sales. I think that one's going to come in really low, and it's going to make people fearful of, well, frankly, a recession. So retail sales are already expected to grow slowly at just 0.2%. Average estimate is actually even lower than that at just 1.2%. That comes out Thursday, the day before the 16th. I wouldn't be surprised for you to just have an ugly Thursday where, like, you know, if Iran decides to strike and you get bad retail sales, the markets aren't gonna be very, very happy. Anyway, so on Friday you get Goolsby to speak. So we'll see what happens with Goolsby. He's an interesting one. He did, oh my gosh, I'm getting so many messages. I'm trying to mute this stuff too. But anyway, Goolsby was interesting because he actually ended up chatting on, I think it was Friday or Thursday, and he wasn't as optimistic as I thought. I remember when he first kind of came on the scene, you know, people joke, they're like, oh, it's Foolsby again. I feel bad for his last name. But the last time he spoke, it was on the 5th. He says that we will maintain financial stability. Forecasts are volatile, and we will not respond to the stock market. Financial markets are more volatile than the Fed. We have to pay attention to weakness in jobs, but we're not seeing that yet. And then he said, he was asked, could the stock market selling off cause a recession? And he says, it could, but it didn't happen in 2015, so he sort of balances it, kind of interesting. And then he just reiterates that employment and price stability are the only thing that matter right now, not the stock market. So we'll get him again on Friday. We also get University of Michigan consumer sentiment and inflation expectations. Those are generally pretty benign and boring, so I'm not so worried about that. I think really the biggest wild card this week, for me, retail sales and what happens with Iran. Now, I'm also watching Bitcoin as sort of a leading indicator. I regularly do this. We've lost the 61.7 line, and we're kind of, this is on the 30-minute chart, and we're running back over here to 57.580. So we'll see which way this goes. To me, I like to use this as sort of a leading indicator of, okay, you know, which way might stocks go. It doesn't always work. So, you know, back test it yourself, fact check it yourself, use it however you want. But usually I see Bitcoin as a bit of a sort of a bearish leading indicator when it's falling. And I don't know why, but it lost its support actually today of that 60,700 level. That's sort of been bleeding a bit today. Just got back from San Diego with Lauren, which was really fun. If you want to see some stories of the kids, by the way, make sure to follow me on Instagram at RealMeatKevin. And actually, I'm just at MeatKevin on Instagram. And you can follow me on X or Twitter at RealMeatKevin on that one. All right, folks. Thanks so much for watching. Good luck this week, and we'll see you in the next one. Goodbye.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.
Even though I'm a licensed financial advisor, licensed real estate broker, and becoming a stockbroker, this video is not personalized advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show shall not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purposes of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services we may benefit from. I also personally operate an actively managed ETF. I may personally hold or otherwise hold long or short positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuer other than HouseHack, nor am I presently acting as a market maker. Make sure if you're considering investing in HouseHack to always read the PPM at househack.com.